Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to the show. As always, a delight to be with you. And today we're talking about a most crucial and important topic, and that is multifamily and commercial insurance. With us today is Lynch, and he is a commercial insurance broker with Ramey King Insurance. He holds certificates for commercial lines coverage, a specialist, as well as construction risk insurance specialist. Ramey King Insurance is an independent agency located in Denton, Texas, and it has been there since 1881. And they are licensed in all states and specialize in multifamily, commercial, retail, and rental property coverage. So JT, I don't think I gave you heads up on this. I usually do, but share with us a memorable experience from your formative years that helped you to be the person that you are today.
Oh, sure. Yeah. It's funny. I kind of cut my teeth right out of college in door-to-door sales. So that if you can do door-to-door sales, especially in Texas, I think it's 109 degrees today. So if you can do that, you can pretty much do anything. And it's one of those things where you hear a whole lot of no's, a whole lot of get the heck out of here type of stuff. But you just have to keep your head down and plug away. And believe it or not, there's still people out there that are making six figures doing door to door. I was fortunate that, I was kind of a shy person growing up, but you kind of force yourself to do things. And I never thought of myself as a salesman. So I think that helped me. So rather than trying to sell somebody, I just tried to talk to them. So if I could go out there and have great conversations with people, then they just became interested in the product. So I was fairly good at it. And I ended up managing sales teams door to door for various companies for almost a decade. So that's kind of anything hard, now it's like, well, at least I'm not outside knocking 100 doors, right? So it puts things in perspective. So I think that it's kind of helped molded me. And it's interesting how when you're in it, you don't realize how much you're learning. And you may say, God, I really hate this. And I didn't hate it. There were parts of it that I hated, but you realize how much it kind of molds you for the future and how important it actually was. So
yeah, 100 doors for one. Yes, that has got to be challenging and difficult. Whatever took you into that profession?
I went to school in West Texas at Texas Tech, but I was born and raised in Dallas-Fort Worth. So I knew I wanted to come back here. So a friend had this opportunity, said, hey, I can get you a job tomorrow if you want. And I said, okay, well, that's a good reason to move now, and I'll find something else after that. And so that it is what it is. It just kind of took off from there. I thought I'd be there, maybe 3 months, and then 10 years later.
Wow.
Yeah. But it's kind of funny how you say, oh, I would never do that. Well, never say never. There's skills you might have that you didn't even know. And you just have to kind of be open-minded, look for the signs, and take you where life takes you, I guess.
Yeah. Well, we've traversed the same territory there. I got my undergraduate degree at Lubbock Christian, and I did spend one semester at Texas Tech as well. And then also, I did some work at the University of North Texas there in Denton as well.
Familiar with all those.
Yeah. So we've been around the same territory there.
Absolutely.
Well, JT, tell us about Ramey King and what is it that they do?
So it's actually pronounced Ramey King.
Okay,
I know when you were doing the intro, you said it's been in Denton since 1881, and that's not a typo. It's family run and operated since 1881. So it's been there for a long, long time. And it's great. If you go down to the courthouse down there in Denton, there's still some signs there. You can see, Ramey King up. So it's pretty neat to be a part of. We're a small family run agency. We're not a captive agency like a State Farm. We're farmers. We're brokers. So we have the ability to go out to multiple carriers to find the best fit for you. We're small enough that we, can take the time to take care of our customers and have relationships with them, but big enough to handle any property that you throw at us. We're also a full service agency. So we specialize in commercial real estate, but I've got clients that own, roofing companies, different shipping companies, things like that. So we can do everything when we even have a personal lines department too. So
Wow.
it just so happens that my boss 35 years ago got into real estate investing and noticed that there was a lack of specialists in the insurance area there. And so that's kind of where he got started. And it's been great. As you know, Texas is a great place to be for multifamily, but because of COVID, we're doing more Zooms now. And I've actually got more clients all over the nation than ever. So it's kind of one of the good things out of COVID, if there are any. And, there's more and more people looking all over the place now. And luckily we're licensed nationwide. So any property you're looking at, we can definitely help with.
JT, you mentioned that there is a difference between insurance companies like State Farm or Allstate or so on and so forth, and brokerage firms. Tell us what the difference is and what's the advantage of going with a broker.
So with a broker, with a captive agency, the farmers, Allstates, they only have their own products to work with in most cases. Sometimes they'll have a one-off auto agency they can go to also, but for most cases, they only have their products. So when they quote for you, they can only present you, this is Allstate's quote. And a lot of times these bigger apartments, especially probably over 24 units, some are different, but a lot of times that's not even in their niche. They can't even quote it, right? You need an actual specialist to do so. But as far as a broker's standpoint, we do all the shopping for you. You don't have to go to Farmers and Allstate and all these others. What we do is we gather up all the information about the property and go out to multiple carriers. Depending on the situation, it could be as many as a dozen different carriers to find the best fit for you. With commercial multifamily, there's really three main pieces that you're looking for in coverage. It's the property side, so the actual physical damage of the property or coverage of the property. General liability, so think of lawsuits that could arise from slips and falls, things that could happen with tenants. And then an umbrella policy to kind of cover in the events that your general liability losses are taken up. So a lot of times the best answer for your property coming up is carrier A for the property, carrier B for general liability, and a different carrier for the umbrella. And that's your best option. And so we're going to go to multiple places to find the best fit for you. And we're also here to make sure that you meet lender requirements as well. As interest rates kind of fluctuate, the lenders are actually getting a little bit more picky as well. So we need to make sure that the building limits that you have are going to meet their requirements and loss of rents and all that. So that's our job. And there's a lot of carriers out there, but there's only so few that will write multifamily. And then there's only so few that can meet those requirements. And we know them all and we shop them, every day. So I think I have about 3,000 doors in the pipeline right now, closing between next week and October. So this is what we do. We know all the big players and it's a major difference for sure.
Well, it seems to me it's a totally different world between commercial insurance and regular homeowners insurance or automobile insurance and so on and so forth.
It really is.
I've always wondered why the big difference? Why doesn't State Farm offer commercial real estate?
I think it's because they've kind of found their niche with personal home and auto. They've got a lot of worker bees out there running their own territories that it's very easy to train for that. And they make a great profit in doing that. So I think for them, they think we're very profitable at doing this. We know this. Why branch out of that and get ourselves into trouble? Also, with these carriers that we're going to that specialize in multifamily insurance, you have to, in order to even talk to them or get a quote for them, you have to promise to bring them $2 million in premium a year, right? And so as a farmer's agency, maybe I could open the door and start quoting that, but can you promise that amount of, premium to come in? Probably not. And so you would really have to make a concerted effort to say, hey, this is what I'm doing and this is all I'm doing to be able to meet those requirements. And so you can see now that they just wouldn't have time to do it. Occasionally you will see a farmer's agency. It's weird. Farmers and State Farm will occasionally drop into the multifamily space for a year or two and then they'll leave. It's like, we thought it'd be profitable. It's not, we're out of the game. And then they come back again. But, for me, I'm like I said earlier, I don't think of myself as a salesman. So if there's ever an opportunity where maybe you have a 6-unit property and I don't know, Ohio, right? There may be a better option at a local farmers agency for you than what I can provide. And I'll be quite honest and tell you that our markets are really designed for bigger properties. And especially if it's that far out of state of Texas, I'll tell you, a local farmers might be the best option.
Yeah, and farmers can do those smaller things, and
yeah, the smaller ones, yeah, but once they get bigger, yeah, they can't handle it. So
right. Yeah. And I don't know, they seem to treat them basically like they just treat any single family home.
Yeah. It's interesting. Some of the times they try to, maybe it's a 12 unit property, but there's multiple buildings spread out. So they don't do 12 units, but hey, I can do quads, right? So they kind of write them separately. And it's like, well, that's not really how you're supposed to do it, but I guess that works, but it doesn't really work. And the lenders kind of catch on to that too sometimes. It's like, especially when you're talking about an agency loan with Fannie or Freddie, that stuff's not going to fly. So
right. Well, I would think it would be much more costly doing it property by property as well.
Yeah.
Well, you had mentioned that there are three things to consider in conjunction with insurance, and that's the property, the general liability, and then the umbrella. Take us through each one of those.
Sure. So the property coverage is just like it sounds. I mean, we're going to cover the physical property, right? So whether it's wind and hail, a car runs into the building, fire, if you need flood insurance, we do offer flood as well. Not every property is in a flood zone. So yeah, that's actual physical damage to the property. And the general liability side of it is, like I said, it's usually a slip and fall out there, or a guardrail was loose and came loose and somebody fell, from the stairs. Things like that could, now the tenant is upset and would like you to pay their medical bills because of neglect on the property. So now that's a general liability claim. Your general liability is usually $1 million per occurrence, but $2 million per aggregate in coverage. So basically, if somebody slips and falls, they can sue you for $1 million and you're covered. And that can happen twice. The aggregate is $2 million. So that can only happen twice in a year. But what happens if they sue you for more than $1 million per occurrence, or it happens more than twice? That's when your umbrella would kick in to cover the rest. Umbrella coverage is usually based off of the number of units that you have. So if you had 350 unit property, $1 million is in umbrella coverage is probably not enough to cover you. If you only have 50 units, yeah, 1 million is probably fine. The more activity you have at the property, your tenants coming and going, their friends and family coming and going, the more likely you are to run into an instance where you might get sued. And so you might need bigger coverage for that. The good news is, a lot of times we don't have to guess at that. The lender's going to tell us, hey, you need to have at least a $2 million umbrella or whatever the case is. But we kind of have a pretty good idea of the number of units. All right, you're going to need this much.
Well, JT, what are the differences in premiums? They vary from city to city, state to state, and so on and so forth. Why is that?
That's a great question, and one I get asked often. The biggest part is just geographic location, right? If you're looking at 100 units in Phoenix versus 100 units right on the coast in Galveston, Texas, there's obviously bigger risks that are at each property. In Phoenix, there's just really not many natural disasters that could come through there, so that the risk is a lot lower. With on the coast in Galveston, I mean, there's hurricane activity all the time. There's flood activity, things like that. And so the insurance companies know my risk of having to pay out a claim is much higher. To combat that risk, the premium is going to have to be this. You'll notice a lot of times when a natural disaster comes through, though, maybe the insurance premiums increase in Dallas, even though the hurricane didn't touch Dallas. Well, we also have clients in Dallas too, and we need to recoup our reserves that we pay off these claims. The best way to do it is, we're the ones that made the claims, sure, their premiums are going to increase more, but you'll see other properties increase as well, depending on the size of the disaster. I know the February storms, the ice storms in Texas, was that last year? I think it was last year.
I think it was this past.
So that was interesting because it's something we've never seen before. I don't know about you, but there wasn't too much damage. Like in my house, there wasn't too much damage done. I know that there were some places that had pipes burst. One pipe burst in an apartment complex, not that big a deal. You've got some water damage here and there. Hopefully you shut off, But the problem was it was statewide. And so that Texas is the size of the country of Spain, right? And so statewide, when you're seeing pipes burst and things like that, causes a lot of damage. And I actually heard a stat that there was actually more deaths during that event than there was during Hurricane Harvey. So that seems really crazy. But if you think about it statewide, then yeah, there's a lot more people involved. So that we saw increased premiums quite a bit. But again, it was a lot of little claims, but a lot of little claims add up. So if you're wondering, hey, why did my premium go up? Well, just think, well, when was the last natural disaster? How big was it? And that has a lot to do with it. The good news is once they kind of get those reserves back in place and there's no future disasters that could lead to a lot of claims, then premiums could go down. We haven't seen it in quite a while, but it definitely happens and it's definitely possible.
Yeah. Well, that certainly was an unusual occurrence. I'm surprised of the number of deaths. Like with a hurricane, I mean, if you're in the path of the hurricane and you didn't heed the warnings, yeah, there's, I think, a good likelihood of death. Mm-hmm. But in the freezes, it seems like, you could mitigate that.
Yeah.
By finding a place to shelter.
Yeah. Unfortunately, you always hear stories, even during hot summers, of someone's AC going out, and it's usually an older couple, and they didn't fix the AC and they died of heat exhaustion. So I think it was the same thing. There was a lot of people that just died because they were too cold. They were supposed to have running blackouts where you're on an hour, off an hour, but in some communities they were off for 2 weeks. So there was some of that. I heard stories of people just desperately trying to warm up, so they went and got in their car in the garage and started their car. And of course, you can't do that. So, and then I don't know if they add in traffic fatalities from the ice as well, but from what I heard, overall, there was more deaths. So it's unfortunate, and hopefully something we've learned from and can get our infrastructure a little bit better to handle those things. I think ERCOT has done some things to help with the power outages. We'll find out this summer. It's going to be, 109 today, 110 yesterday, and it's going to be triple digits the rest of the week. And here on out, we've heard that there's going to be some rolling blackouts. I haven't been affected by it, but I've heard that it's definitely possible. So,
wow. Well, I'm glad I'm not in Texas.
It's been hot for sure.
Well, speaking of deaths, you had mentioned that there's the property coverage, there's the general liability, and there's the umbrella. So say you have a fire in your property and someone dies as a result of that. What aspect of the insurance is going to cover that? Is it going to entail all three of those aspects?
Right. So the general liability is going to cover the death. The property damage itself from the fire is going to be covered by the property coverage. You bring up a good point. There's each different policy is going to cover different things. I'll get a lot of savvy clients that actually, the ones that read through these 17 pages of legal jargon called their insurance policy, but sometimes they'll see this whole 3 pages of exclusions. And maybe the property coverage says, it excludes something like deaths or slips and falls. And they go, wait a second, JT, I'm not covered properly. Well, no, it's excluded on your property policy because it's covered somewhere else, right? And so depending on the nature of the claim and what happened depends on kind of what part of that coverage will take care of it. And sometimes it's a gray area, and you'll see a carrier even within its own company kind of dispute it and fight. Well, who takes care of what and who takes, where it's supposed to be. And that's part of the reason why these pages of these policies get so much longer, because these incidents have happened. And so they have to now add that line item so that going forward, they know, all right, it's black and white now, not gray. This is what's going to be covered.
So if I understood you correctly, if you have a 100-unit property or a 350 property, your general liability is still going to be limited to essentially the $2 million. Is that correct?
That's correct. Most cases of the policies we find are going to be $1 million per occurrence and $2 million aggregate. So that can be exhausted pretty quick if you have a 350 unit property, because there's a lot more people there, right? A lot more instances of accidents that could happen. So that's why you would need a bigger umbrella policy to offset that. In the event that those limits are exhausted, then your, say, 350 unit could be a $10 million umbrella, right? But that's when that would kick in to help offset any of the limits that are exhausted.
So there's generally limits on the general liability, but the umbrella policy is really more geared to the size of the property.
Yeah, absolutely. There's different sizes of general liability you could get, but most of the time it's 1 million, 2 million. And then that umbrella is what kind of picks up the rest there. It's the premiums going to change. I mean, you want a $25 million umbrella? Okay, can find it. Is it a little bit overkill? Probably for the size, 350 unit property, definitely a 100 unit property. You could get it, sure, but it's going to cost you more in premium. So my industry is really unique because I have clients that they want the lowest premium possible, no matter what. I don't care about deductibles or this or that. And then I've got others that, no, I want the best coverage possible. I don't care about price. Most people kind of fall in the middle. They want to meet lender requirements, know what their limits are, where there might be some gaps or where I might have a little bit more risk. And then, okay, the premium's fine with that. So it's kind of interesting how everybody has a different kind of risk tolerance. And yeah, it changes every year too.
Well, JT, the effects on premiums, location has an effect upon that, and the amount of coverage you want has an effect upon premiums. Does the property itself have an effect upon premiums?
Absolutely. The next biggest thing, probably besides geography, is claims. Are there recent claims made? Most carriers will go back 3 years. Some will look back 5 years. A lot will ask for 5 years just to see, what's going on. Was there a trend? If there's someone always falling every year, well, why? But most of them kind of do their rating and loss ratio scenarios based off of 3 years. So, if there was a big fire, a $2 million fire claim that took, down 20 units 2 months ago, yes, your premium is going to be much higher than if it wasn't there for sure. And what it really does is it takes out, I mentioned we have a dozen carriers we could probably go to. Now we've got 2. There's only probably 2 or 3 maybe that'll even look at it. So without that competition there, they know that they can almost charge whatever because there's nowhere else you can go, Now, Alan, does that mean that that's a bad property to buy? No, absolutely not. I've got a lot of clients that kind of not necessarily look for that. If they hear from it, they don't shy away at all. They know that that's more leverage to actually maybe lower the purchase price because they know that this insurance is going to be a lot more than what it should be. And then they also know it's only going to be there for 3 years. We take care of the property. We get everything fixed. We have make sure that it's safe. Each year, as long as there's no other occurrence, it's going to drop. And I got a much lower purchase price. So it all depends on how you look at it. Some people, again, just like anything else, would be really afraid of something like that. And others would see an opportunity and pounce at it. I think more experienced investors that are kind of used to that, used to talking to different lawyers and being able to negotiate those, probably are more open-minded to that. But I'd recommend to everybody, just because something doesn't look quite right, on the front of it, doesn't mean it can't be a great deal. So,
well, it's interesting to me that claims history has so much to do with the premium.
Yeah.
Are circumstances ever taken into account by the providers? I mean, say, for instance, you said a fire within the last 3 months would definitely be an issue. Well, that fire could have just been a really fluke, and it may not be a really high-risk property. Do the insurance companies ever look at that, or it's 3 months ago, your premium is higher?
Absolutely. If you brought me a property and said, hey, 3 months ago we had this big fire, I'd send you a list of items, questions about the fire. So when it occurred, how many units were affected, what was the total loss, but also what started the fire. So if it was a lightning strike that started it, that's a lot different than arson, right? Arson tells the carrier this might not be the best area, and the chances of this happening are pretty good if it happens again, right? Mm-hmm. Lightning strike, probably not. So the difference between the two are night and day, right? It's just a matter of what are the risks and can it happen again? A lot depends on, is the claim closed? If it's closed, that helps out tremendously. If it's still open, the new carrier may say, I don't want to write this because if it's still open or there's still damage that needs to be repaired, I don't want to be involved in any future lawsuits or any future damage because this property is being repaired or because it's something new comes up and the claim's still open. So I don't want to have anything to do. But if it's closed out, the repairs have been done, that makes a big difference too. And they also take into account you're a new owner. You're going to have new property management. Our job is to bring a great narrative in front of these underwriters to show why they should write it, why this is going to be a good investment for them. So we're always looking for, Alan, what is your CapEx list? What are you looking to do improvements wise on this property? It's in a high crime area. I noticed that you're planning on putting in extra lights, more security cameras. You're going to put in gates, fix the fencing, make it a lot safer. Okay, that's great. Because the last owner, they weren't doing that. We feel better with this new owner. Your premiums may be a little bit higher going, on this first year. But once you put in all these things and you've shown, hey, we've done great work, then that really does affect things going forward.
Well, what are some tips, JT, in terms of minimizing risk to our properties?
So great question. So location, right? Try to figure out what kind of risk would be involved there. Dallas is really interesting because we don't get the hurricanes, but we get effects from hurricanes. We're not necessarily in Kansas, so we don't get huge tornadoes activity coming through, but we definitely do get tornadoes. But the biggest thing for us is hail. We get huge hailstorms. Big baseball size hail all the time. You can at least twice a year, your house is going to get pounded by hail. So you won't find a house here that has a roof over 10 years old. So if you weren't from here, you might not necessarily know that. So you would want to do your homework and know kind of those risks, what's involved. You want to try to find out claims situations if you can before getting into, as a lot of times before you submit an LOI, they're not going to give you the loss runs or claims history. If it's a big enough claim, they probably will disclose that, but try to find out that information as best you can. The 60s to about 80s properties, there is a risk there for aluminum wiring. So during that period of time, there was a copper shortage, and so they started using aluminum wiring instead of copper. Unfortunately, that is for a number of different reasons not a good conductor of electricity and been known to cause fires. So doesn't mean that's a property you don't want to buy and pursue, but you got to know that, hey, this is a risk here. We're probably going to have to take risk mitigation measures right after acquisition. So you got to build that into your CapEx. Know that premiums might be a little bit higher, but again, that could be a negotiating tool. If you add that into your budget, maybe it's not even that big a deal. There's also the Federal Pacific or Zensco breaker panels. Same time frame. They've just been known not to break. So whenever you've got a breaker panel that doesn't break and, there's big voltage that's going through there, then that could cause a fire as well. So I also tell people, how does a property look? So there's so much to know when underwriting a property. And I feel like some people just have their nose stuck in their spreadsheets. But did you go out to the property, first of all? Does it look like a nice property? How do the roofs look? I know that they said they replaced them 2 years ago. Does it look like it? Is that the first $350,000 mistake that you make? Because you're going to have to replace that roof. How are the tenants happy? Are people kind of reclusive? Are there just strangers walking around? Also, it's so funny. Put the address into Google. If the first thing that comes up is a double homicide 6 months ago, maybe it's not the best area, right? Again, that doesn't mean that you shouldn't purchase it, but there's going to be some things that you want to tackle going forward. And don't yell at me when the general liability premium comes back a little bit higher. That there was a double homicide there 6 months ago, right? So I think some things are kind of obvious. The aluminum wiring things, you wouldn't know unless you knew. The location things, you probably have an idea that a coastal property in Florida is going to be more than, some property inland in, Ohio. But yeah, some of those things that seem obvious, security and all that. Yeah, just take your nose out of the spreadsheets for a second. And is this a nice problem, right? So some of those things, I think, don't get looked at enough.
Enlightened investors, what an enjoyable conversation we've had today. I look forward to being with you in our next episode. JT, thank you so much for sharing your knowledge and wisdom with us today.
Yeah, thanks for having me. I hope I was a value add, and happy to come back. I know there's a lot more to get into, but I hope this helps your listeners. And yeah, happy to be here. Thank you.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.